Okay, this is the weekly commentary 5. 5 or 6, I'm pretty sure is number 5. And it's going to be a bit different this time, yeah? I want to cover some higher time frame analysis before we dive into what happened this week. So you can class this one as a higher time frame recap lesson as well as um, the weekly commentary. So this video might be a bit longer because I always keep getting questions. I keep getting questions about the higher time frame stuff, and I get it. Higher time frame is not the easiest thing; it's the hardest thing. Yeah, that's why the main analysis I do look at my time frames. Yeah, I have a 12-month, a 6-month, a 3-month. I have a 6 hour as well. These are my time frames I have. I spend the most time on these ones. Let's look at the DXY. Yeah, let's go on a 6 month. On a 6 month, what do we see? Coming lower, and then we take out this high. Market shift on the 6 month. Yeah, remember we're trading lower. Look, these lows, we go below it, and then we come up, and now we're respecting this low. This low is not taking out this low. So when this happens, you're not trading. This is where you need hindsight. This is where you are patient. Okay? When you see these formations, forget we're on the 6 month right now. When you see this pattern on any time frame, yeah, when you see that this price is coming down and we're taking out lows, we're taking out this low. We took out all these lows. We're at this low now. We retrace up, which is normal. We always have to retrace up. Like here, we retraced up and then we came down lower. So we retrace up again, we come down lower. But what's happening? The algorithm is not seeking the liquidity under this low. It's not seeking the liquidity under this low. Stop looking at candles for the sake of them being candles. Think of it algorithmically. Think of it algorithmically. It's not having a tendency to come down lower for the sell stops at this low. Straight away, internal dialogue within your own mind right now. Sell stops are being protected. It's not seeking them. So on the move away, forget the time frame. On the move away from this low, from this higher low, let's see what price wants to do. So we move away higher. And then what? We move and we zap this high and this high. So we're respecting the lows. We're not attacking sell stops. We're attacking buy stops. What does that mean? We're going to carry on attacking buy stops. There's a liquidity pool above here. On the 6 month as well, if you go like this is OTE range on the 6 month. This is OTE range on the 6 month. We could be due a retracement from this area. We see heavy reaction off here. That's fine, yeah? But what's lying within this OTE range? Is it this one? Within this OTE range, there is imbalance in this candle from this wick to this wick. Now, what is under this low? This is a low. This candle's wick is a low. What liquidity is under lows? Sell stop. Sell side liquidity is resting there. Long run, before I expect any crazy bullishness on the dollar, we want to see the market take this sell side liquidity, fill this area of imbalance, rebalancing the area of imbalance before finding some sort of support here and making higher levels in the DXY. That's a 6 month. The way you want to do your higher time frame analysis, it's about being an analyst. You want to form the best educated opinion, blending all the time frames. That's a 6 month. Now we come to the 3 month. If we look at this range of price right here, It's in the OTE region, right? This is known as a rejection block, and we're rejecting off of that right now. We are in a premium. Within this price range, we are in a premium. Again, this imbalance is here. If we remove that one and you make a note, 3 month, we're trading in a premium. We're attacking, overall we're bullish. By all means, when we retrace into this imbalance, you can look, when if we're coming down, because this is a 3 month, it's a large time frame. If we retrace down into this imbalance, by all means, 3 months on the hourly or the 15 is many days of price action. That's how many? That's that 90 days of price action or 60 days of price action. If we do reject here and we're going for this imbalance, by all means intraday, you can look for shorts until this region. If you go on the monthly, it's the same thing. From this high to this low, we are doing what? We're rejecting off the OTE area. We're rejecting off of a premium area. Now, just to insight, why premium? Why discount? The algorithm, it does not have eyes. It doesn't have eyes, doesn't have ears. It's a code. It's just an endless loop of code that's running. It takes more data every single second, every candle that's formed, every new pool of liquidity that's formed, every single institutional reference points that's formed. It collates all that data and runs the loop that it does. The thing that it does is the same. However, because it uses different data, that's what an algorithm does. Because it's always taking in new data, price delivery looks slightly different. However, it's only doing the same thing. It's only rebalancing areas of imbalance and it's only delivering liquidity. But it's because of the data the algorithm is always taking in that delivery of liquidity or rebalancing imbalance could look different to other times it's done it. And that is so key, and you need to make a note of that. You need to understand that. Now, within premium and discounts, so we're in a premium here. The algorithm doesn't see it, but the algorithm acknowledges, it identifies this area of premium. Within this price range, it's in a what? It's in a premium. Now, let's go a step further. I'm going to take you into a better, like a higher level concept. This is the last 60 days of trading, yeah? From here to here is the last 60 days of trading. Let's go to the highest and the lowest point within that 60 days, which is here. We're above the 50, so that means we're trading in a premium. Using the 60 days, the algorithmic reference point, because the algorithm's not going to consider the time from 1997, for example, until it trades close to that price again. For now, it's considering these 60 days. And of course, every single day that we get, we'll move this line forward and forward and forward and forward. And you'll see that the premium and the discounts change within this range from the 60 days of the current day that we're at. Using this range, and I didn't want to teach this guy to you guys yet, but I feel like a lot of you are ready to learn this, right? Using this range within this last 60 days, where are we at the DXY? Are we above the 50 or below the 50 within the last 60 days? We're above it. So when you're above it, what do you want to look for? You want to look for sells, because the algorithm is identifying we are in within the last 60 days. So with reference to the time, the 60 days, we are at a premium, which is the reference to price. Now we're blending time and price together. The aspect to price being the premium that we're in, and the reference to time being within the last 60 days. Yeah. Now, with the DXY, what do we see? It trades lower. Yeah, remember, we didn't take out this high. On this retracement coming up, what happened? We didn't take out this high and we came down. We came down and we're finding a level of support within this volume imbalance. We move up again higher. However, before this candle happened, let's do a little replay. Let's replay it from here. What's left here? What's left here? From this wick to the candle's bottom here. What's left here? Imbalance is left there. That imbalance is still there within that candle. It has not been traded into. Yeah. What does this candle go do? Let's look at the OHLC. Yeah. So for this candle, look at L. The L is 638. Now look at H for this candle, 623. Pretty much fills the entire imbalance and we reject off of it on the 4-hour. These lows are very equal. When it's very equal, that is like a magnet to the algorithm. That is called the draw on liquidity. What liquidity pool is the algorithm seeking? Is these lows are very, very equal. I can't see them staying in the market for long. I expect this to be traded through because these lows are way too equal. They're too clean. Yeah. Now, look how I just dictated where I expect the DXY to go. I expect the DXY Monday is gonna be very huge to see where the DXY is trying to go. This is very unclear. Right here is unclear. We're going sideways here. It's unclear what we're doing. I want to see a move lower. Unless we break this high and we're trading above it clearly, then we are going to be attacking these highs. Without doubt, I'll be looking to trade it above here. Ultimately, if it has the steam in it, to trade it above here. But for now, we moved lower. We filled the bearish imbalance, and now we rejected off of that. On a 1 hour, what's happened? We've created this equal lows. We filled a lot of this imbalance. However, what did we just react off on an hour? We reacted off an order block. And we're seeing lower prices. Now, on the hourly, this is huge. Are we going to break this high? Or are we going to break this low? This is where patience comes in. This is where you're not trying to trade this. You're trying to wait for signatures. You're trying to wait for it to be clear. You want the green light to trade it. Right here, it's not clean. I'm saying let Monday pass. Let Monday pass. Right? See what the DXY wants to do on the Monday. Because right here is it's not anywhere you want to trade. Right? If you go with a fib from here, it's probably at near the 50. And at the 50, you don't want to be trading around the 50 level. You want to either be trading it in deep discounts or deep premiums, right? So stay away from the DXY until you get a clearer picture. You don't have to trade it. You don't have to trade every single day. When it's clear, take the trade. Yeah. So that was the small section where I wanted to touch on the high time frames. If you want these time frames, you have to upgrade to the pro version. I think it's £14 a month. I highly advise it because with the time frames, you also get this function where you can split the screens up into two, have a higher time frame and a lower time frame screen. But now let's get into the what happened within the week, right? Oh crap. That's Thursday, Wednesday, Tuesday, Monday. So this was the DXY. I'm going to remove this reference point right here, yeah? Just remember there's equal lows there for now, just to make sure that the chart has less clutter on it. So on the 1 hour, Monday, trading it. Makes this high on Monday, and we trade lower. Remember the reference to the news, okay? Remember the news, what there was. On Monday, there wasn't really much news. If we go back, there was nothing for the USD pretty much. It was a shift in the daylight saving, which is the time. Yeah, it was New York used to be UTC plus 5, now it's UTC plus 4. That's what happened. So now, if you go back to fast forward, you see the first severe news event was on Tuesday, right? At 1:30 our time, 8:30 New York time. This high came in at 2 o'clock. So half an hour after the news event happened, this high came in. And what did that high do? It took out Monday's high. Here, the high that was made at 9, it took out Monday. Yes, I understand these ones. These ones are in the market as well. I understand that. However, the time that it was forming at, my eye goes to this one. This is more significant. This is more out in your face than these ones. If there is a severe news event on the Tuesday, expect there to be a raid on Monday. So if we were bearish to DXY that week, right? This week that just passed, we were bearish on DXY collectively. Monday created a high. If there was the news event on Tuesday for the USD and there wasn't one on Monday, it's likely that that news event is going to be used for a raid on Monday. This is where you have to build a logical foundation for what to expect. You have to use everything. The news event. Think about it. There was nothing on Tuesday. On Wednesday, yes, there's plenty of news for the USD. But I'm going to touch on that. USD Tuesday right now was used as the smokescreen to make people think that price is going to become bullish. Yeah, we take out these lows. This is called inducement. What was lying behind these lows? This fair value gap from here to here. This imbalance here got filled whilst removing this low. When you break the low, you are inducing sellers into the market because people, retail traders, breakout traders specifically, they will have sell stops here because they believe if this low breaks, we're gonna go all the way down to this low. Support resistance type philosophy, right? However, this low, look how the market is rigged. From this wick to this wick, they are equal. That's equal. That is called relative equal lows when you see something like that. There is imbalance beneath it. There's no way this was going to stay in the market. Relative equal lows with an imbalance beneath it. Think of it algorithmically. Reference point to price algorithmically. We're seeking liquidity whilst trying to rebalance areas of imbalance. So this area, which has a liquidity pool and an area of imbalance that needs rebalancing, how sensitive do you think that is algorithmically? Algorithmically speaking, how sensitive is that to the algorithm? The algorithm has that. It's locked on. What happens? It fills it, and this happens on many time frames. Many time frames you'll see something like that. When you see a liquidity pool equal relatively equal lows, and when I mean relatively, I don't always say equal, I say relatively because they don't have to be equal, right? The more equal they are, the better. Yeah. The more equal they are, it's likely the more liquidity built up there because that's how retail traders think. They want the tops to be as clean as possible. However, they're not always equal to the top, like to the pip. They're not. So we call it relatively equal lows with an imbalance. We go in there and we fill it. We run Tuesday's high with aid of the news, and then we break down lower. When we break down lower, the news event on Wednesday was used as what? The catalyst to drive it to the intended direction for the weekly close, which was a bearish weekly close. Well, bearish objective. This is how you have to frame your trade ideas using everything. Forex Factory. When Monday passed, you'll see on Forex Factory, okay, Tuesday has a news event. So what's flowing around in Monday that makes logical sense? There's this high and low. It makes sense for us to take out anyone that's trading above here and then deliver it. If we are truly bearish, if you're bearish, you wanna always see a high get taken out before moving lower. That's something we're gonna go into in the intradays as well. It's called offset accumulation. Now we trade lower. When we break down lower here, what's left? An imbalance here. We come up, even though this is a volume imbalance, we come up to what? Around the 50%. And we break down lower, and we come here, tap into this order block, and we break down lower. The low of the week was made on Thursday without surprise. And what did I say that Friday will do? In the discussion or the my chart section that I have access to only, Friday is usually a small range day which will just float within the weekly range. So from this high to this low, Friday will just trade within it. It won't go and make a lower low than Thursday, which is very common. Thursday on a bearish week tends to cap the weekly range, especially if Thursday was a big, large trading day. Look how large this move was. It's likely that Friday, unless there's a news event on Friday again, like NFP, it's likely that Thursday capped the weekly range and Friday will be used as a retracement. Retracement into what exactly? Into an order block, and we're moving our lower. Now, this is why you want to see, are we reacting off this order block and seeking lower levels below sell stops? If so, I'm bearish. If so, then I'm bearish because we're reacting off of bearish order block used to seek bearish sell stops or bearish prices. Right now, this whole thing here, I want to see a movement away from it, make it clear trading. There's no imbalance here, and down here there's none as well, which is why I'm sitting on my hands until we see something clearer. Let's go on to 15. If we see the 15, this move on Monday, we took out these short-term lows. Yeah, this is the internal range. External range here, internal range within it. We take that out, react off this order block, and we come down lower. Then we run this high. If you're saying, what does this high go into? This high, it doesn't always have to go into an order block. Don't get stuck up on order blocks and mitigations. Don't always get stuck. The first thing you want to consider is the liquidity. What did this high do? It ran out this liquidity. That's it. It ran out this liquidity. And then we break down lower. On the 15-minute, when we see this higher, yeah, remember we ran a high, and on the retracement down, it looks like we're targeting lows. That's the market structure shift. And we're trading lower. So when a market structure shift happens, what are we attacking now? Sell stops. Your eyes should go to here, and you should aim to target these. Take out a short-term high into this order block, and we trade down lower, and we trade down lower. This is something that will catch so many traders out. It can even catch me out, right? You break the high, you'll think bullish market structure shift, but then what happens? It comes down and breaks the low. That is whip. That is when it's whipsawing. You don't want to trade that. And then with the volume imbalance, you want to look for something clearer. That is very, very tough price action to trade. to knock out this high and come down lower, it creates a breaker, which we will touch on next lesson. Actually, there's a breaker. Low, high, lower, low. Low, higher, high, low, low, I mean. And it actually comes to this we're here. One, two, three. That's actually the breaker, right? That's the breaker. If we extend this out into time, you can see how we're trading within the 50% of the breaker and we broke down lower. So it's good confluences and good things to consider for a bearish narrative, right? Because that's all we're building. We're building a bullish or bearish narrative. What makes more sense? Is it making more sense that we're going to deliver lower prices or are we going to deliver higher prices? What makes more sense? What are we reacting off? Are we reacting off bearish things or bullish things? What's being respected? Highs or lows? These are all things you use to build your narrative for then going on the lower time frames within the intraday and entering the trades. Yeah. On the euro, what do we see? We come down lower, we tap into this order block, and when we retrace up and then retrace down, we don't really take out the low, right? We don't trade through it aggressively. We're rejecting off of it. And then what happens? Price shoots up higher, higher than this high. However, this is internal, so we're not too bothered. When we see it, we're not too fussed. Okay, it's an internal high. We could, for whatever reason, be rejecting off this order block, which we did. However, when we reject off this order block, from the rejection, are we seeking the liquidity down here? No, we didn't. We found support and we went up higher. This high broke this one. When we broke with this high, it's good confirmation that it's going to probably most likely become bullish because what's happening? We're respecting these lows. We took out an intermediate low, but this one is still, this range from starting from this here, from the bottom, is still intact. And then we trade above here. We're trading, we're trading, we're trading, and we just keep on going up. We took out this high. If I remove these and I go on a higher time frame, what's happening? We filled this imbalance that was left from this candle to this candle, and we rejected off of it. And we've done it again. This high is greater than this high. We could be anticipating a market structure shift on the euro. The only reason that it's a bit of a pickle because when the daily and the weekly are not lined up, it's very difficult. So you see on the weekly, what happens is we're filling in this breaker block. This breaker block has now been traded to. And this week, right? What happened this week? This week's high, yeah, the previous week's high was raided by this candle. Now this is a very big deal because this shows bearish signatures within the euro. Look at the DXY. We didn't really raid it. We didn't raid the low. If we raided this low, right? If we traded lower than this low and we rejected heavily, I have strong bias for bullish narrative. But we didn't do that on the thingy, the DXY. On the pound, I'm bullish now on the pound. We rejected off this order block. I had my eyes on this for so long. I think for maybe like a year. And we're finally trading to it, right? I'm expecting these highs to get traded to On the pound, I'm expecting these highs to get traded through. What happened this wick? Yeah, this wick traded lower than this week's low, and then we're trading above of it. So we took the liquidity from the previous week's low, and we're trading higher. Bullish signature, bullish narrative. With the euro, and remember the euro and the pound, they're not always in line, right? Because of this euro GBP pair. But with the euro, what happened? We done the opposite. We took liquidity from the previous week's high, and we're trading lower again. And this is a market maker sell model. And how the market maker sell model, what the theory says is, you see the start of it, which is this, we will trade below this. That's what the market maker sell model says. So that's why I want to see where Monday trades. Tomorrow is a big trading day in terms of it's going to clear up a lot of mess from the market to help with our bias because we want to see what the euro does and more specifically what the dollar does. This is times where trading is I'm sitting on my hands seeing what's going to happen. This is where the men and the boys are separated initially because people that can't control their emotions, can't control themselves, they're going to be trading headlessly. Wait for something clear to trade. No one has a gun to your head telling you to take a trade every day. Wait on your hands. By all means, paper trade it. Trade it on a demo if anything, right? But you want to see where Monday is going to trade to. And if Monday is not showing you anything, well, then Tuesday should clear up. 9 out of 10 times, it should clear things up. With Bitcoin, it's still just in this range, right? And on the weekly on Bitcoin, we are just heavily reacting off this breaker. This breaker and this fair value gap fill, it's just building orders here for a big move. After this break, it's going to be a big move for Bitcoin. It's not favorable to trade. It's in a range. It's in a range between an order block, a bullish order block, and a bearish breaker. It's in between a bullish reference point to the algorithm and a bearish reference point to the algorithm. You don't want to trade things like that. You want to see one of them being disrespected. Because when both bullish and bearish is being respected, well, what's your bias? Which one? You don't want to add to the liquidity, right? Sit on your hands. If this one's getting disrespected, you know that you should favor a bearish narrative because this bearish breaker is being respected. This bullish order block will get traded through bearish narrative. You're looking for bearish signatures to be respected and bullish signatures to be disrespected. The rest is just patience and finding a smart logical entry on a smaller time frame like the 15. If you even go to the 4 hours, even worse. Let's zoom out this. Who would trade this in the right mind? Let's say you took a trade here, yeah, to buy. It's the 11th of March. For 2 whole days, you're seeing barely anything within this. You don't want to trade moves like that. When you see this dip down, and then quickly move back up, anticipate a high to get taken out. We took out low and we came back in. Anticipate a high to get taken out. So for example, this high to get taken out. Or just trading above these wicks, which happens. Because what's happening here? Simple. You're taking sellers to buyers. You're taking sell side liquidity, delivering to buy side liquidity. Simple as that. On Bitcoin, I have my eye on one thing. I'll share with you guys right now. Is it on the weekly maybe? Let's see it. Should be on the daily. Yeah, right here. What I said earlier in the video, we have an imbalance and we have a short-term high which has what above it? Liquidity rusting above it. So what makes sense now? Build a narrative. Trade higher into this imbalance, see how price reacts within this area, induce buyers by breaking this high, filling the imbalance and coming down lower. Logical narrative. That's how you build narrative. Now, when that happens on daily, once you see the daily trade into here, you want to go on the lower time frames. And then that pattern I showed you on the Discord chart for the market structure shift, you look for that. That's what you look for. That's your confirmations that yes, we're rejecting off that imbalance area and we are now seeking lower prices on the lower time frames. That's how you want to use the higher time frames and blend it with the lower time frames. However, we're going to go in way more detail within the intraday teachings. But that's just like a foreshadowing of the future of the mental ship. There's this weekly commentary, I feel like I touched on a lot, right? You might need to watch this one a few times, but this is probably the best weekly commentary as of now because I touched on the 60 days premium and discount. That's the reference point to time that you want to make. Blending areas of liquidity with reference points to price. So liquidity pool, imbalance, liquidity pool, order block. When we go through the whole of chapter 2, I'm going to tell you how to blend them together, right? But that's the end of this weekly commentary. Any questions, ask me. Watch the videos in order. If you are not finished chapter 1, by all means, don't even ask me a question to do with this because in the most respectful way saying this, you're jumping the gun, you're not submitting to time. You should be finishing chapter 1 before you see this because this is chapter 2 and you're only going to hinder yourself. There's no race, yeah. It's not even this, it hasn't even been 2 months of this mentorship. Take time. It's a long run game, alright? Anyways, take care of yourselves, guys.